Hello everyone and welcome to this module on USDA loans. Let's begin by discussing conventional loans and non-conventional loans. Non-conventional loans are government loans. They include things like FHA loans, VA loans, and USDA loans. Conventional loans, on the other hand, are mortgages not part of a specific government program. These are private programs and they're not government insured or backed. There are two categories of conventional loans that you need to be familiar with: conventional conforming loans and conventional non-conforming loans. Conventional conforming loans conform to the standards of Fannie Mae and Freddie Mac. Conventional non-conforming loans do not conform to the standards of Fannie Mae and Freddie Mac. So what are USDA loans? USDA loans are loans overseen by the United States Department of Agriculture, or the USDA. Now, for a property to be eligible for a USDA loan, the property must be in an eligible rural area. And the rural area is defined by the USDA. Now, the USDA eligibility site is a web tool offered by the USDA that allows for the determination of USDA eligible properties. And you can find the USDA eligibility site by simply Googling USDA eligibility site. Let's talk about USDA qualification requirements. Now, the USDA does not place minimum credit score requirements for USDA loans, so lenders set their own policies on credit scores. There is no down payment required for a USDA loan, so the LTV could be up to 100%. And the housing DTI, also known as the front DTI requirement, is 29%. The total DTI requirement, also known as the back-end DTI, is 41% for USDA loans. Let's talk about USDA products. There are two USDA products that you need to be familiar with: the Section 502 Direct Loan Program, also known as the USDA Direct Loan, and the Single Family Housing Guaranteed Loan Program, also known as USDA Guaranteed Loan. Now, the USDA Direct Loans are loans directly offered by the USDA, so it's in the name. These loans are directly offered by the USDA. And these are offered to borrowers with low to very low income. And the terms could be up to 38 years for these types of loans. On the other hand, the Single Family Housing Guaranteed Loan Programs are loans made by private lenders. These are loans made by private lenders, so they're not directly offered by the USDA. And these are offered to borrowers with low to moderate income. This is a 30-year fixed-rate mortgage, so ARMs are not allowed here. So you want to just remember that the Single Family Housing Guaranteed Loan Program is a 30-year fixed-rate mortgage. Let's talk about the Section 502 Direct Loan Program under the USDA. Now, these, as we said, are loans directly offered by the USDA, and they're offered to borrowers with low to very low income. Terms could be up to 38 years long, and to qualify for this program, the applicant must be without decent, safe, and sanitary housing. The property must be utilized as a primary residence, and the property cannot have a market value in excess of the applicable area loan limit. Also, the property cannot be used for income-producing activities, so income-producing farms are not allowed. Now let's talk about USDA guaranteed loans. These are loans made by private lenders, so they're not directly provided by the USDA, and they're offered to borrowers with low to moderate income. Now, USDA guaranteed loans are 30-year fixed-rate mortgages, and to qualify for a USDA guaranteed loan, the property must be owner-occupied single-family home, so multi-units are not allowed. The USDA guaranteed loans require a USDA guarantee fee. The upfront fee is 1% of the loan amount, and it can be financed into the loan. The annual fee is 0.35% of the loan amount, which is paid monthly. Now, the property cannot be used for income-producing activities, so income-producing farms are not allowed for USDA guaranteed loans. Let's talk about USDA seller concessions. The USDA allows up to 6% of the sales price in seller concessions. Remember that this is similar to FHA loans, which allow up to 6% in seller concessions. VA loans allow up to 4% in seller concessions. And this concludes our module on USDA loans.